Welcome back to our next session on the Small Business Insights. I'm Paul Raventhink Accountants, and I'm with Judy Reynolds from Opening Gates. And in this particular session, we're going to talk about personal services income and how that affects our tax obligations. So, Judy, following on from our contractor versus employee discussions earlier, what is your understanding of personal services income?
Fancy asking a business coach that one. I'm so pleased I don't do this technical stuff anymore, and there is a fair bit of the technical side of this, because there needs to be. So personal services income, we call it PSI, and we're going to be using that acronym, just a heads up. But I'm going to throw that back to you, Paul.
I thought you might.
Yeah. So what is personal services income?
Well, personal services income is income that's earned primarily through the efforts of an individual. So rather than the income being earned by plant and equipment or the business structure, etc., it's income that's defined to be earned by the individual. A good case or example would be, say, a computer programmer who, while he may have some laptops, etc., the income is earned by his skill and knowledge. Now, you take another example, like be a truck driver. I've got a truck, I drive the truck, and I contract that service out. Now, the truck is the thing that earns the income. The fact that I drive it is ancillary. It is the truck that earns the income. So there are sort of, I guess, two polar opposites that easily identify what is personal service income and isn't. Now, the ATO focus obviously is on the basis that people are using structures, companies, trusts, etc., to divert what is personal services income to other individuals or entities on a lower tax rate. Now, that's why he's having a focus on that.
I see.
So one of the problems, one of the issues in the past has been that the ATO focus has mostly been on the sort of the top end of town, sort of lawyers, accountants, etc. And now they're changing that focus and saying, well, and they're even looking at tradies, saying, well, who earns the income? If the income is earned predominantly by the individual services, then he expects that income to be come back to that individual and be taxed on that.
Okay.
Getting it wrong, there can be significant tax penalties. And it can be a complex area, and just working out, is it personal services income? There may be a fine line, but getting it wrong could then mean that the ATO can hit you with penalties, possibly back taxes. You can be subject to the risk of audits. Not always a great thing to happen. And the ATO does also closely monitor income from certain sources and where that income is actually ending up.
So, Paul, what are the risks to individuals and businesses if they incorrectly report PSI to the tax office?
Well, Judy, I mean, the biggest risks, of course, are the ATO will fine you, hit you with perhaps unpaid taxes and even back taxes. There's a risk of audits, and as we all, well, some of us will know, audits are not a particularly nice thing, and there's, once again, there's fines and perhaps even legal action. And the ATO does closely monitor income that's split and derived amongst family members, so they can check these things.
Okay. And as far as determining what is PSI, how does the tax office do that?
Well, the tax office has a number of tests. There's the results test, where it's a matter of, was the income derived from a specific project or task? If so, then it's less likely to be PSI. The unrelated clients test, is income earned from more than 80% of your clients, 80% of your income coming from different clients. There is also the employment test. Does the entity have any employees? In other words, is the income being earned by other parties? And the business premises test. So if you, as part of all that, you tend to be renting premises, then you're less likely to be considered personal services income.
So it's a minefield.
It's a minefield, yeah, absolutely.
So if, you know, obviously what you often see is people start up a business and they go out and they get a company or a trust structure. So what are the dangers of, you know, splitting or diverting PSI income through structures like that?
Well, as I mentioned, pretty much the penalties from the ATO. The ATO can consider it to be, you know, part of the Part 4A tax avoidance. So the intention was, you know, was to split your income to individuals and entities at a lower tax rate, and as I say, the potential current taxes, back taxes, penalties, it can be quite severe in a business.
So what would you recommend for someone who's starting a business, potentially PSI, in terms of starting straight away with a company structure, for example?
Look, I think the first thing is to contact a qualified advisor. Contact your accountant. They can understand and assess what your business is, where does the business fall, is it clearly personal service income, is it a business, who earns the income, is it the individual, is it the structure, is it the plant and equipment, and that way they can assess business types, if you like. There is an ATO decision tool. Once again, that can be helpful, but once again, as I said, do not rely on that 100%. Always consult an accountant to help you make those decisions.
Yeah, understand. And is it likely that over time your situation can change? So you might start with PSI income, and then as your business grows and develops, that assessment changes?
Most definitely. A lot of businesses will always be PSI, and a lot of them purely from the nature that they don't want to grow. They'll always perhaps be the only person earning the income, and that's fine. But others will then change as they grow, as they have growth plans, start employing people, start using significant equipment, etc. So then it can move from purely personal services income right through to genuine business income earned by the entity and the structure, and therefore the opportunities to alienate some of that income then become quite valuable.
When you say alienate that income, what does that mean?
Well, it means that the business is now generating a profit. The principal is being paid a good salary for what he's doing, and the business is generating a reasonable profit, and the business then, if it's run through a trust, may have the opportunity to distribute some of that net business income to other family members or entities who are in a lower tax bracket, or leave profits, if it's in a company, leave profits in the company to be taxed at a lower rate, because it's not purely income earned from that person's individual services.
Okay, I understand. So clearly talk to your accountant sooner rather than later.
Absolutely. Always talk to your accountant first, and then you'll have a path forward and feel that you're pretty much protected from the wrath of the ATO.
And not unpaid tax, basically.
Exactly.
Yeah. Thank you, Paul.
Okay. Well, thank you again, Judy. And if we can be of assistance to anyone to understand this reasonably complex area, please feel free to give us a call, email us, or contact us on the link below. And thank you, Judy, and we look forward to the next session.